Welcome to Explain the Charts, your go-to channel for deciphering complex market movements. Today, July 18th, 2025, all eyes are on Ethereum or ETHUSD as it makes significant headlines across the crypto space. Recent news is overwhelmingly bullish, with reports of Ether taking the crypto spotlight as Congress passes a historic stablecoin bill, potentially paving the way for broader institutional adoption. Einvest reports a substantial 8.6% surge in ETH's price over the past 24 hours, hitting $3,642.23 and nearing short-term resistance. This upward momentum is further fueled by robust institutional and corporate accumulation. Notably, the Trump family-associated crypto venture, World Liberty Financial, has boosted its ETH holdings by an impressive 126.2% in just 3 months, now holding over 70,000 ETH. Nasdaq-listed SharpLink Gaming has emerged as the largest corporate ETH holder, with over $1.1 billion in Ether, surpassing even the Ethereum Foundation. Adding to this, two newly created wallets accumulated $745 million worth of ETH from major exchanges recently, signaling strong long-term holding strategies. Spot Ethereum ETFs, including BlackRock's ETH, are also seeing remarkable inflows, indicating growing institutional demand. On the analyst front, predictions are soaring, with some experts forecasting ETH to top between $7,000 and $10,000 this cycle, and VanEck even projecting $6,000 by 2025. There's also talk of an impending alt season, where Ether breaking new all-time highs could trigger a broader rally across altcoins. However, it's not all sunshine and rainbows. CoinMarketCap highlighted concerns of Ether potentially falling to $1,800 amid ongoing ETF outflows and macroeconomic worries earlier this year, a prediction that unfortunately materialized. The block also notes persistent concerns about Ethereum's scalability and high transaction fees, although these are offset by its robust developer community and planned upgrades. Now, let's turn to the charts to see how these events have manifested in price action and what technical indicators are telling us. Looking at the daily chart for ETHUSD, we can observe a volatile but overall upward trend since March 2024. In March 2024, Ether saw a strong push towards $4,000, peaking around $4,091 on March 11th, which was then followed by a significant pullback. This decline in March and early April saw ETH drop to lows around $2,500, aligning with the bearish sentiment reported by CoinMarketCap about a downtrend from late 2024 and early 2025. Indeed, a low of $1,809.49 was hit on March 10, 2025, showing that the $1,800 prediction from bearish analysts was realized. However, this was followed by a powerful rebound. The candles from late April and May 2025 show impressive bullish strength, with a notable surge on May 8th, where the price jumped from around $1,800 to over $2,200. This strong recovery from the $1,800 level highlights that this price point acted as a critical support zone, as mentioned by CoinMarketCap, and indeed it held up before a reversal. The subsequent buying pressure, particularly observed in June and July 2025, has pushed ETH significantly higher. Notice the consecutive strong green candles from July 9th through July 16th, driving the price from roughly $2,600 to nearly $3,400. This rapid ascent directly correlates with the Einvest news about intense buying pressure and renewed market interest in the very recent past. The price has successfully climbed back above key psychological levels such as $3,000, which now serves as a strong support level. The current price in the news, around $3,558 to $3,642, indicates that this upward momentum continued just beyond our latest daily data point, pushing past the previous high in this data range of $3,479.33 from July 17th. This rapid climb to current levels indicates that the initial short-term resistance around $3,500 to $3,600 identified in our news sources is now being tested. Now let's zoom into the 1-hour chart to observe the recent short-term price action and volatility that led to the reported surge. Focusing on the period from July 10, 2025 onwards, we can clearly see the intense buying activity mentioned in the news. Following a period of consolidation around the $2,900 to $3,000 range in early July, ETH began a steady climb, breaking out of this range. You can see clear bullish engulfing candles and sustained upward movement, particularly noticeable from July 14th onwards. This visual confirmation of strong green candles aligns perfectly with the ETHUSD report indicating supportive technical indicators and intensified buy-side pressure. The volume spikes accompanying these price surges on this hourly chart further validate the renewed market interest and buying momentum. Short-term support can be identified around the $3,100 to $3,150 zone, as the price briefly consolidated around these levels before pushing higher. The psychological resistance level of $3,200 to $3,300 was decisively breached, turning it into new support. This short-term rally confirms that the market is reacting swiftly to the positive news flow and institutional interest. Shifting to the 15-minute chart, we gain an even more granular view of the intraday movements and immediate reactions. Looking specifically at July 17th, we observe rapid fluctuations as the price approaches higher resistance levels. The strong bullish impulses are evident, with swift moves upwards, often followed by brief consolidation or minor pullbacks. Notice, for example, the strong push around 1735 Universal Time Coordinated and 2105 Universal Time Coordinated on July 17th, where the price surged rapidly in short bursts. These rapid gains are indicative of high liquidity and aggressive buying, characteristic of an overbought market as suggested by the reported RSI levels in the news. However, immediately following these sharp upward moves, we can also identify periods of profit-taking or supply entering the market, causing slight retreats. These smaller retracements on the 15-minute chart offer potential short-term entry points for scalpers or traders looking to capitalize on minor pullbacks within the larger uptrend. Key intraday support levels emerged around $3,350 and $3,450 on July 17th, as the price bounced off these points during minor dips. The current price cited in the news, above our latest 15-minute data point, suggests that this volatility and upward pressure are ongoing as of this recording. So, what does all this mean for ETHUSD, both in the short and long term? From a bullish perspective, the sheer volume of institutional interest and accumulation, coupled with strong ETF inflows, paints a very positive picture. The market's rapid recovery from the $1,800 levels and its current ascent towards historical highs indicate robust underlying demand. The potential for a full-blown alt season once Bitcoin dominance shifts, as analysts predict, could provide another massive tailwind for Ethereum. Furthermore, ongoing network upgrades addressing scalability and fees are critical long-term growth drivers that will only increase demand and utility for ETH. Conversely, bearish sentiment still lingers from past downturns and macroeconomic uncertainties. The contradictory reports on ETF flows from different sources highlight a potential area of concern or market misinterpretation. While some outlets report inflows, others emphasize historical outflows, suggesting a cautious approach is warranted. High network fees, even with planned upgrades, could continue to be a hurdle for wider adoption, especially if competing chains offer lower costs. Short-term, if ETH can decisively break and hold above the $3,600 to $3,650 resistance level, we could see a rapid move towards the $4,000 mark and beyond. This current resistance zone is crucial for determining the immediate trajectory. A failure to break through or a strong rejection might see ETH retest support levels around $3,400 to $3,350. For long-term investors, Any significant pullback to the $3,000 range or even closer to $2,900 would likely represent a strong accumulation opportunity, given the sustained institutional interest. In recap, key price levels to watch are the immediate resistance around $3,600 to $3,650 and the stronger historical resistance near $4,000 to $4,100. On the downside, key support levels are established around $3,350, $3,000, and the very significant long-term support at $1,800. For unbiased predictions, a continued rally to $4,000 is moderately likely, around 65% chance, reinforced by sustained buying pressure and positive ETF flows. A breakthrough towards the $6,000 to $7,000 range, as projected by analysts, has a 25% likelihood, highly contingent on broader crypto market strength and a definitive alt-season kickoff. A sharp pullback to the $3,000 to $3,100 region carries a 10% likelihood, which would be reinforced by unexpected negative macroeconomic news or a significant, verified reversal in institutional sentiment and ETF flows. Traders should monitor volume accompanying price movements. High volume on breakouts reinforces the move, while low volume suggests weakness. Keep an eye on Bitcoin's dominance. A significant drop from its current high levels could indeed signal the anticipated altcoin season. Also, watch for news on Ethereum's technical upgrades, as positive developments there could provide fundamental bullish momentum. Always remember to conduct your own research and manage your risk effectively. Thank you for tuning in to Explain the Charts, and we'll see you in the next one.